Please take note and take seriously what I say in this video. So you'll remember some time ago on my main channel, Black Belt Barrister, because you're here on my money channel, Daniel Shensmith, so make sure you subscribe here too. I talked about Keir Starmer asking the regulators for ideas as to how they can grow the economy. He gave them a deadline until around about now, the middle of January, to come back with ideas, and they've come back with some ideas. But this video of mine is to warn you that if these ideas are implemented, you absolutely have to take care of not just your own personal finances, but those of people close to you, your children, to prevent them from making, let's just call them stupid decisions, with all respect. Now, let's take a look at what's happening here. So as I said, we're here on my money channel, helping you build and create wealth. And that includes being very careful when you borrow money, because debt is the killer of wealth. So unless you're in that category where you can leverage debt as huge companies do, and I'm talking hundreds of millions and billions, etc. But for most people, debt is the killer of wealth, believe me. So let's take a look at what's going on here. So this is the BBC reporting for credit. They say that the regulators have come back, and what they've come up with is this. They say strict rules on mortgage lending could be loosened to allow more people to borrow for a home. The regulator's calling to this call for ideas from Keir Starmer. It's likely to review the balance, they say, between protecting borrowers and accessing home loans, in a move that would be welcomed by lenders. Well, I'm sure it would, because the rules are there to protect the consumer. Put very, very simply, the rules are there to ensure that the borrower can service and repay that loan so that they don't risk losing their home. Now, for those of you that say, stay in your lane, mate, you're a lawyer. Well, I am a qualified mortgage advisor. I haven't done that for quite some time now, but I've bought and sold dozens of properties. I've been qualified as a mortgage advisor for many years. I am currently debt-free. I owe nobody anything whatsoever. So I am somewhat qualified to talk about this. And of course, I've advised clients on financial rules and so on as a barrister. So let's get that out of the way. I'm in my lane, trust me. So when I say this, you have to be really careful about what the banks allow you to do, because the whole 2008 financial crisis crash was because so many people had borrowed money that they couldn't repay. They couldn't service the debt. Now, there were some areas around the UK that were literally like ghost towns because people had help to buy, they'd been gifted deposits or all sorts of different things, but then they couldn't service the mortgage. So they just abandoned the house, abandoned ship, if you like, they just left. Now, of course, walking away from the property wasn't the end of the matter for most of them, but they abandoned it nonetheless. So there were huge areas that were completely deserted, and that led to a tightening of all the rules and the regulations to ensure that those people could repay those mortgages. So when we come back to this article here, there are two ideas that have been floated about. One, to relax the rules on mortgages, and secondly, for some reason, to scrap the £100 cap on purchases made by contactless cards, because contactless payments are really easy to make. I'll come back to those in a minute. I have my issues with that as well. Let's stick with the mortgages first. This is quite possibly the biggest one that's going to affect people. So as it says here, the strict rules mean lenders have to be sure that people can repay those mortgages, testing them for higher rates of interest. Now, as a former mortgage advisor, I would always say, what if your mortgage went up by this amount per month? Can you afford that? And therefore, there was a very difficult conversation had to be had sometimes that they simply would not be able to afford it, and therefore it was not necessarily the best thing for them to do. Other rules were imposed on mortgage providers after the financial crash, which exposed the reckless lending, putting major financial institutions at risk. Obviously, some big institutions collapsed, but the FCA will point to current low numbers of borrowers missing repayments or having their homes repossessed. I would argue, yes, because of the rules, because the rules are there to prevent people from falling into arrears and therefore having their houses repossessed and falling behind on payments. So the rules are working. You take the rules away, those numbers will go up. I think they will go up because the rules are obviously keeping people in check. So if we get to a point where the lenders are now happily giving people a mortgage that a few weeks prior they were not happy to give the mortgage to, and these are banks, remember, who are looking to make money on lending people money, obviously they've got to play within those rules, but they will happily lend you the money and go after your property if you default on the payments. And so this article quite rightly questions same mistakes, i.e. are we making the same mistakes that we did before? Lenders would welcome the move, but some may question whether lessons have been learned from the crisis. Well, absolutely, I would question that, because if those rules were put in place because of the difficulties people had before, which led to the whole industry crashing, it only goes to a reason that the same thing might happen again. Now, of course, they would hopefully have a lot of people looking at it and being very careful with how they relax those rules and how much they relax those rules. But as I say, I stress, if it's you or your relatives or your children that are looking to take these loans out, yes, on the one hand, there is a celebratory moment where they've been approved for that mortgage and they can get the house. But if they can't deal with a change of circumstances, if the interest rates change, they get to the end of a deal and the new deal is too expensive and they just can't afford it because their affordability is not there, because it was given to them on more relaxed rules, all based on affordability, then they might end up in serious trouble. Then that comes up to my other video where I think it's on this channel. I lose track now. I think it's on this channel where I talk about whether or not you should be a guarantor for somebody on their mortgage. Now, there's a legal requirement that the mortgage companies force whoever is going to sign to be a guarantor to confirm that they've had independent legal advice. Now, I've had people come to me and say, it's all right, it's just a formality. And I have to have the difficult conversation with them to say, it's not just a formality. I need to give you this formal advice. And they are quite shocked, actually, as to the extent of that advice. I'll try and find the video and I'll link it. So if you're in that position again, then you really, really need to think carefully about it. Not just take the advice, but really let that advice sink in. I always did it as a written advice, a note of the conference. The conference is sufficient for the bank, but I would do it as a written advice so that they know exactly, they can take it away, they can digest it, and they know exactly what they are getting into. But this says, reviewing the mortgage lending rules would help the affordability, not just for first-time buyers, but for those looking to move up the ladder. Banks will always lend responsibly, but the current rules are restricting a number of people that can get a mortgage can also be relaxed. Now, famous last words, banks will always lend responsibly. Yeah, until there was a crash in the market many years ago, because it wasn't responsible, although they probably said it was at the time. And of course, you had to have advice at the time. And so there were rules in place at the time. It wasn't a free-for-all, but that they were much more relaxed than they are now. But these rules that are in place now are because the whole thing came down like a house of cards. So my closing word on that is, if they do relax the rules and you're one of these people that will now be approved for the mortgage, just do your own evaluations and put stricter rules on yourself to make absolutely sure that you can afford it if the circumstances change. Warning over. Right, let's move to the other one, which I think is a little bit strange, actually. The next idea is to scrap the £100 limit on contactless cards, making it easier to spend. Now, let's look at this for a moment, shall we? The whole spending money on your contactless card payments thing is, well, there's twofold, really. One, it makes it easy and convenient. And secondly, easy and convenient means it's also at risk of other people, RFID theft and all that sort of stuff. So actually, when you make a payment using contactless, it doesn't feel like real money. I had a trick, which I think I've talked about in previous videos. Whenever I would buy something when I was much younger, I don't do it now, but when I was much younger and I wanted to buy something that was reasonably expensive, I would physically take the money out of the cash machine, hold it in my hand, count it, put it on the table, spread it around, put it back together, hold it. And then I very often decided I wanted the money rather than the thing that I was going to buy. So I kept the money and I put it back in the bank. And so that was a little exercise that I would do to stop me spending money. Now, that's much more difficult, obviously, if you just get your contactless payment and you tap and you make this payment. Now, they're looking, and for that reason, that's one of the reasons there is a cap, which is £100. I think it's 200 or whatever it is on Apple Pay, but they want to scrap. Their idea to grow the economy is to scrap this limit, to make people spend more. But what that's going to do, in my opinion, is push people into more of a deficit than they are now if it's easier to spend money. And that is, after all, one reason that this cap is in place, to stop people from spending money so readily and easily so that they end up with less money. The second reason is security. Obviously, if there's no limit on these cards, my first question as a lawyer with my lawyer's hat on is, what about the fraud aspect? Are the banks, if they scrap this limit, are the banks going to honor any kind of fraudulent activity on these contactless payments, regardless of the cap on the limit and how much is spent? There's another question for you. Check with your bank. If they do scrap it and you do go out spending it, make sure your bank is going to cover the amount that gets stolen if they end up spending thousands on these contactless payments. There's another thought as well. I mean, at the very, very least, you should have all the security features on your phone so that they can't just so easily do that with your phone. But with the card, it's just a tap. And if there's no limit, bam, 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 and thousands of pounds could be gone. Double check that your bank is going to cover you for all of that loss in there. Because that, again, is another area which I think the limit's there for a reason. Two reasons. One is to prevent you from spending too much so that you've got less money, and the second is security. So those are certainly a couple of things that I would urge you to consider about the spending cap as well. So these are the ideas, we'll call them, coming back from the regulators. So in essence, ask the regulator for ideas to boost the economy. The regulator says, ease the regulations. No surprises there, that's the idea they came up with. Not sure what else they would have come up with. But anyway, let me know what you think, and let me know what you would do, whether you'd be swayed, because that will tell you a lot about yourself if you tell me. Make sure you like the video and subscribe to the channel. This is my money channel, and as always, thank you for watching.